And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Wednesday, September the 8th. I'm John Hoagland. Thanks for trusting me with your time. If you're in the markets already, hopefully they're heading your way. Our equities are deep in rollover, currencies deep in rollover. It's going to be a challenging trading day, as if they aren't all. We're going to focus on good context, accurate context, good risk management, and always exercising good patience. For those of you that joined me yesterday for the first class of Futures 101, the history of futures trading, hopefully you enjoyed that unofficial history of futures trading. And it's a pretty good attendance, some good people there. We're always looking for feedback on how we can improve. Today's Futures 101 is going to be basically on the Tradeovate or the TS Trader platform. Open it up, show you how to open charts, change things, indicators, all of those things. We're going to just do a quick run through of the platform for you this today at 12 o'clock, 12:30 that is, for Futures Trading 101, the basics of the platform. There is the link for that if you would like to attend. After that, of course, we also have group coaching at 1 o'clock, right after the Futures 101. I'm going to have to use a different link for that. I'm sorry about that, but we'll get that figured out here for the next time through. And then today also, one of my favorite days of the month is the day that Dr. Andrew Menaker joins us for Market Therapy. 3:15, markets are closed. We can relax a little bit, and the doctor and I are going to discuss how this business is difficult, of course, and how we deal with periods of time that we may not make any money. You go to a job, you've got an agreement with your employer who's going to pay you for your time or for the work that you do, and you get paid for it. This is one of those businesses where it may not necessarily always be true. So we're going to be talking about perhaps some exercises and thoughts for dealing with that type of situation. This is a skill that requires a lot of practice and a lot of knowledge and mostly self-knowledge, which is what I love having the doctor here, because he's a clinical psychologist. He is the guy. He's an active trader. He's worked with many, many really big traders, and so he's going to be giving us some thoughts and ideas on how to deal with periods, again, when we may not be making money. This is they say it takes 10,000 hours to become an expert at anything. It's not that necessarily true in futures trading. You can stare at charts for 10,000 hours and learn nothing. A lot of it is about the practice and the type of practice. Purposeful practice, deliberate practice is where we're going to really do our best shortening of the learning curve. So that first link, again, Futures 101, the platform. The second link, group coaching. Already got a couple of good questions thanks to Mr. Fred Decker. And then, of course, we have the market therapy at 3:15, just after the close. You guys are going to be sick of me by the end of this week, I think. I might need to take some time off. All right. As far as economic releases this morning, 9 o'clock, we're looking for the job openings and labor turnover survey. Probably not typically a market mover, but with the focus on employment and what's going on with all of that, it might be a little bit more impactful for us today. So make sure you are well aware that 9 o'clock JOLTS is coming out. Even if you're not watching the number, make sure that you are protected by using stops. 1 o'clock today, the Fed's beige book comes out. Usually not impactful, but it is kind of a warning shot that it's 2 weeks from the next FOMC meeting. A lot of questions as to when they're going to stop tapering quantitative easing, when are they going to start changing rates? All of those things will be on the table in 2 weeks for the FOMC meeting again. As far as today, U.S. stock indices opening steady to lower as we wait more data with regard to employment. Remember, it is in rollover. It does change the market a little bit. ECB plans to begin reducing its quantitative easing program, and the news of that has hit the European stocks overnight, so they're considerably lower. Inflation pressure continues as aluminum has hit a 13-year high, and the API is expecting another draw in crude inventories this afternoon. Yes, it's on Wednesday, and the EIA is tomorrow due to the holiday on Monday. They're looking for a draw of 3.8 million barrels. We'll have to see how that plays out. Crude oil has gotten a little bit of a bid under itself in the overnight. We're going to check that out here very shortly in the charts. Make sure you do hit the lucky like button. Share, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel. VIX up about 4% this morning, 1885. Still not a big number, but it's a pretty substantial percentage for it to be up today for as kind of small as our equities are on the downside. The dollar index 92.62 up slightly, and the yield on the 10-year down slightly at 1.35%. All right, I got to say good morning to everybody as always. Brett, first in the room, you win the prize. James, good to see you. Emu, we're here now. Imanu. Brian, Jim, Rob, Janus, Theo, Drew, Bill, stacking bananas. I always love the gorillas there stacking bananas. Let's stack some bananas today for sure. Steve, Ryan, Frederico, Tone, Harry, George, Caesar, Zorain, James, good morning. Andre's dead letter opener. Greg H, rolling. Keep those contracts rolling. Yep. Wen, Steve Lee, good to see you. Trading Research, good to see you. Vince, always a pleasure. And I got to get that changed. Good morning. Notice the Zoom meetings are always recorded. However, if I miss a meeting, there's no replay available. Seems it would be easily remedied. What's the status on that? Trading Research. The market therapy will be up on our YouTube channel here within a couple of days of its presentation today. The Zoom meetings, we do get a lot of requests for that. We weren't really planning on kind of keeping those as kind of evergreen material, but I do appreciate the feedback. I will bring that up, and we will see if there's a way that we can kind of distribute that. I mean, at the very least on YouTube. But I appreciate you, continuing to comment on that, and we'll see if we can get that situation fixed here. I will have a meeting on it right after the forecast this morning. Jason, Frederico, Cameron, good morning. Murph, good morning. Dr. VJ, Adrian, Chris, Razor Trades. Hey, good to see you again. Ange, Robert S., good morning. Juan, Justin, CL Breakout. Nelson, good morning. Luis, Justin, can you tell me your thoughts on NG this morning? I don't look at it that closely. I know you've been mentioning that you would like to have a look at that, and I'm going to see if I can't take something else off and take a look more of a look at natural gas. I know that's a very popular product these days. And again, thank you very much for your feedback and for your ideas. Okay. Ray Paradise, great discipline, past step 2 combine. Nice. Way to go, Ray. Way to go. Getting funded. We're looking forward to seeing your continued success. Thanks for letting us know, and congratulations. All right, some good thoughts, good comments, good things, and some good feedback this morning for us. So thank you all very much. Good morning, Chris. Let's jump into the charts and see what we're looking at this morning. Let's go tip through the tulips, shall we? This is the 30-minute in crude. Let's just start here with the daily. So, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We've been stuck in this little range here for quite a while. It's really been 2 weeks. We kind of expanded the weekly range last week, but we're still inside of it. We're still centrally located in it. We know that rollover is coming next week for crude oil. It should be switch day will probably be on Thursday, so we'll be watching volume and talking about when we're going to be changing to the November contract. So really just kind of a range-bound rollover kind of market we're seeing here. Yesterday we added 4,500 in open interest on some pretty decent volume, but that also can... What the heck? Ah, there it is. I lost the chart for a second there, and it's back. I'm going to make sure it's still back for you folks. And there it is. Okay. Scared me for a second there. I felt like I was driving with no headlights on. All right. So really just range-bound rollover kind of activity here. Rollover takes some of the bigger, stronger traders out of the directional market and puts them into a situation where they want to try and get a cheap rollover. And that seems to be where we are. 10 days of balance, short time frame controlled. Many visual targets on the 30-minute chart. Open interest increase, rollover a blurry. Your rollover a little bit blurry. Take a look at the 30-minute chart. We do have a gap situation here. Look at all the naked points of control that we've got just hanging around in the neighborhood. We've got one here. We just hit this one here. I'm going to take this back, take the ray off it. And because we've hit it in the regular trading hour session, we've got yesterday's point of control. We got a point of control down here. We got a point of control. We're surrounded. I think they've got us surrounded. We have some overnight inventory that's long to the upside. Settlement yesterday was 68.35. Almost all of our overnight activity has been leading to increasing buying, bringing price to the upside. We've got a gap situation. If we can't close the gap relatively early, I would think it's probably pretty much a cinch that we're going to come up here and check this point of control from last week. Pretty readily, or is that Monday? That's last Friday. But other than that, outside of the weekly range from last week, is kind of uncharted territory. Lots of visuals, knowing we're in rollover, knowing it's more likely going to be more range bound, unless something happens. API this afternoon could change things. EIA could change things. Heck, a news event could certainly change things. But I'm going to be looking at this as a market where I'm going to be looking for short time frame levels with which to execute and with which to exit. It would be wonderful if the market could give me the chance to take a look at last week's high or last week's low. We got a long way to go between them. It's going to be a bit of a random walk inside last week's range, so be careful. Looking at the short time frame structure here, we've been putting in lower highs and lower lows. We just put in a higher high now. Still not looking at any huge opportunities here. Of course, you get a dollar move in crude, a substantial move. That's $1,000 a contract, and those are available. Just be patient. Make sure that you are looking at levels that you can manage risk, previous structural levels. And, if you can catch parts of this random walk, catch it. Don't fall in love. By don't fall in love, I mean, you get a good profit in crude oil, you take it. Don't start getting dollar signs in your eyes inside last week's range. S&Ps. Okay, tomorrow is switch day. It's the day in the pit where we would physically switch positions. The December contract would move into the September big part of the pit, and the September would move into the December smaller part of the pit, because that's where all the volume is going to be moving into. However, it's typically not until the Friday after switch day where the volume rolls over into the new coming contract month. So I'll be watching tomorrow, taking a look, but I'm relatively confident that Friday is the day we're going to be switching into the December contract. Seems strange to be thinking about a December contract in the S&Ps. My goodness, we're looking at Christmas already. So, we added 17,000 in open interest yesterday. Now, because it's rollover, again, that's a little bit blurry, but it does indicate that some short bets either came in, or we saw some, and perhaps we saw some liquidation. So, but with the increase in open interest, this is kind of saying that there's some bets to the short side coming into this market. Well, we see what's been happening every time we have a bunch of short bets coming into the market. It's really just established a buying opportunity, and without some sort of news, I'm expecting something similar to that. To that effect. I'm going to be looking for opportunities to buy weakness, which we got a nice opportunity at last week's low in the overnight session last night. We still have an all-time high in the extended trading hour session. Market doesn't like that. It's likely to go back up and take that out in regular trading hours sometime soon. We don't know when, but sometime soon. Take a look at the 30-minute chart. Settlement, 45.19 quarter. Put that on your charts. Have we really moved? Have we done anything? Not necessarily. We're still back in range, back in value. Looks like we may have an opportunity, perhaps, to reject value from yesterday. We'll see if we open with some kind of a gap. But again, this test down here to last week's low is somewhat important. And we also have an unchecked naked point of control between the price and that level. It hasn't been checked in regular trading hours, therefore I consider it still unchecked. We want to see all of the participants in the marketplace when these things occur. So we may have a pretty good shot at taking another look at this area down here for an opportunity. Again, remember, it's rollover. Markets are a little weird during rollover. The Nasdaq has been holding up very well. It's got about 6 days of range, just dancing along the all-time high, last week's high. We took a look above it. We have not accepted above it yet. And look at how rangy it's become. 1, 2, 3, 4, 5, 6, 7. 7 days in range. Excuse me. It's rollover. Tomorrow's switch day. Probably going to be switching to December on Friday. Balance rules remain. As long as we stay inside balance, we're fading the extremes. We're selling the highs. We're buying the lows. If we break out and accept outside either side of this area of balance, that's a situation where we would look to try and go with that situation. But I'm not expecting anything big like that because, again, it's rollover. Our major players are more interested in getting a cheap roll than being directional. They'll get pushed into directional activity, but they'd rather focus on getting a cheap rollover, which is going to keep us relatively range-bound and short time frame controlled. Speaking of short time frame, let's look at the 30-minute chart. Range-bound, 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 range-bound. Inside value, no real overnight inventory. Settlement 1798.50. No real change going on here. Stay patient. Okay, here's our all-time high that just squeaked out above Monday's high. It's in extended trading hours. So again, markets aren't going to like that. We've got last week's high in the neighborhood. This is a target-rich environment if given the opportunity. But inside range and value, I'm going to try and stay patient and wait for the market to come to me and say, here's something for you. It's cheap. It's in a good trade location, and it's not going to cost you much. Let's take this one. If I go looking for trades in rollover periods of time, I'm going to find a lot of them, and most of them aren't going to be any good. So I'm going to let the market come to me, say, here's an opportunity for you. The first thing I'm going to check is, does it make me nervous? If it makes me nervous, then I know it's probably a decent trade. As far as I'm concerned, if a trade doesn't make me nervous, there's something I'm missing and it's too easy, tends not to trade that well. If I get to a situation where the trade makes me nervous, then I'm looking for that opportunity and thinking about what my competitors are doing. Quite often the best trades are contrary to the most recent activity. Not suggesting anybody try and pick a top or pick a bottom in a directional market. I don't see much of anything in the neighborhood there for us to be thinking about in the Nasdaq. Gold. Friday, Monday, Tuesday, Wednesday, Friday and Monday, the weekly kickoff high proved to be too expensive. Okay, that weekly kickoff high, 1838. Got pretty close to it on Friday. Couldn't do it. We've broken our last bull flag looking thing here. The market yesterday trading basically right down to this trend line. I always find that interesting. Open interest and volume indicate long liquidation yesterday. We lost 6,400 in open interest on some pretty decent volume. The thing about that is, when you have long liquidation, it actually takes selling power away from the marketplace. So this major trend line right here is going to be something I'll be focusing on if given the opportunity down there. All right, no overnight inventory. Settlements right here, 1798.50. Put that on your charts. We open in range and in value. We've got this blue zone up here, this 1807 to 1809 zone here. Okay, that was a support zone. We blasted through it yesterday. If we get an opportunity up there again today, it might be a useful area for an execution. The opening range is the high of the regular trading hour session here this morning. Didn't really expect to see that happen, but it did. The high of the opening range is 1803.80, and we've got last week's low here, kind of acting as a little bit of resistance. But where we are here, in the middle of range, in the middle of value, not really looking at too many opportunities in the middle here. I'll see what happens if we check the overnight low, see what happens if we check yesterday's low. I'll certainly see what happens if we start checking up to this area here, this 1807, 1809 value high is right in that neighborhood. There might be some fish there. Do I see any fish here? Not really. I think they're a little deeper. We're going to have to wait and fish a little deeper for those tonight. Or today. The euro. We have also in rollover. We'll be watching to see how the volume moves over the next couple of days. We'll be trading December in our currencies as well. Over open interest blurry but impressive. We added 13,000 in open interest to the downside here. Again, that can be part of a function of the rollover. We've got a little bit of a bull flag perhaps starting to present itself. We're down near the low end of that. We're down near the low of weekly kickoff low, which is 118.08. So we may be seeing some opportunity here. Take a look at the 30. Getting a little bit long-winded here. Opening range initially the low of the session that has been taken out. We getting our little trend line down here. Weekly kickoff low in the neighborhood. There's likely to be some fish down here, folks. It's a naked point of control. It's the weekly kickoff low, and there may be some convergence with this trend line here at some point today. So, we do have gap rules. We did open with a gap. Settlements all the way up here, 1847. Pretty decent gap. No attempt to close the gap. Well, perhaps a little bit of an attempt to close the gap has us looking for the opportunity to perhaps see if we can find some fish down here at weekly kickoff low. Again, that weekly kickoff low, 1808. And to the 10-year, which I'm thinking about replacing with the natural gas. I don't know how many treasury traders are here, but we'll see how that goes. So it's just kind of bouncing along. Boing, boing, boing. Lower volume and open interest as price kind of comes closer to retesting this weekly kickoff low, which is 132 and 25/30 seconds. This 20-session exponential moving average has been supportive and has been supportive for some time. Take a look at the 30. So we opened with a gap. We have not yet closed the gap, but we do have last week's low here looming as resistance. We opened in a gap from yesterday to the previous day. We've created another gap. This leans itself towards repair. We have yesterday's point of control here. We have this point of control here. All of the visuals that have been below price have been checked all the way through down to weekly kickoff low. We've got more visuals above. I would say this is more of a target-rich environment than the downside. Of course, any changes in rates are certainly going to affect that. It's very indecisive here, and again, with no true test to close the gap, I'm going to probably be, if we can take out the low from last week, I will certainly be looking at these two naked points of control as visual targets. And markets are visual. So Justin's doing some great trading apparently in the nat gas, also likes the Russell. Boy, are we just missing you, NM. Justin? replace the 10-year with the Russell. Huh. All right. So, all right, I'm going to end this. We've got about a minute and a half before the equity open. So, Futures 101, the platform. Group coaching, always awesome. My favorite part of the week. Traders talking trading. And then at the end of the day, market therapy. So have a good trading day. Looking forward to seeing all of you that are willing to come. Thank you again for the feedback and the ideas for the forecast and everything else. We're always improving here. I just did not change myself over here. There we go. So thank you again. Looking forward to seeing you at today's events, and looking forward to your success. Take a deep breath. Have a great trading day, and I'll see you for the events later on. Remember, Futures 101, 12:30, group coaching 1 o'clock, and then Dr. Menaker at 3:15. Have a great trading day. Get out there and profit. Trade well. I'll see you in the pit in about 1 minute. Have a good day.